EGIF Warriors. How's everyone doing? Hi, Tom. Everyone doing okay? All right. Yes, Claudia. Same to you. Okay. Want to just start off with a small victory lap because I can't run long distances anymore. So Euro Pound was, I had a concentrated position on it going into the throwover, added on a little 3 drive. We had it on, Andre had it on. So the pattern in play worked for our subscribers. Everyone should have had a decent week, and not just with that. But before I get to tooting others' horns, just a quick update. This is the first daily non-confirmation in the gold here. So I'm not saying it's done. You know, we still could go 1480 or so, but check this out. So here's the daily. So this was a reason, and Blake and I talked about it and agreed that this double top was not going to stand. I didn't think it would, and the reason why is this. So just another example of when a market confirms a high with momentum, that it could be a high, which it was, but not the high. And this isn't necessarily a short, because it's only the first divergence. I like to see a couple, but it is at least, at the minimum, a take profit. Everyone with me when it comes to the gold? So, you know, I am beginning to, look for reasons. The silver got to the top of the wedge, right? Exceeded it. So, this was a wedge in silver. And here again, technical analysis, the rules based on wedges. Again, you see an example. So, it's not just a theory. So next time you see wedges, it won't always happen, but that is a rule on a wedge, that you could have 100% retracement. We've had more than 100% retracement. So silver still, gold silver ratio still looks good to me. There could be a correction on that. And, I was telling people, we'll know when gold tops when I get long yen. Okay, so here's the yen actually held the 78.6 level, shaking out the 61.8. Just like gold, I'm not ready to just jump on the long side of the yen. We could have some retests and do a little work down here, and possibly, even go for these lows. But so far, certainly held where it had to. The reason I think I say both on gold and yen is yen still had a down week. There's your weekly candle. And gold still had even though we're getting some profit taking up here, gold had a great week, right? Here's a weekly, down 9.5 now. But look at that candle. Is there anything in that weekly candle that says short me? You're welcome, Tom. Okay, so S&Ps. We talked about the off number being 2986, so we're not going to get a 2-week reversal. And actually, I talked about if there was anything that we looked pretty ugly the day before yesterday on the S&Ps, right? And then we had that recovery based upon, came with some Fed speak later in the day. That's also when the dollar got hit. Dollar's coming back pretty good, but I thought a weak dollar would give the market relief. So the big question is this a failing rally in the S&Ps up here? I don't think so. And I think that if we get a blow off into next week, make new highs, I'd like to see the RSI stay under 70. So although we have divergence on the 4-hour, it's not that ideal. It's 75. Look at the 1 hour. Yeah, we'll see what the 1 hour does. Daily, you know, everyone's pointing it out. It is diverging. New highs will not blow out this divergence on the daily S&Ps. Really, this was the last time it really confirmed. Looks like here. Okay, I'm sure there's other things I'm missing to talk about, but you know what? It's Yezer from the group, aka Doji Hunter. I have a question regarding American S&P. Americans generally advise a dollar cost average, but into stocks, dollar cost average. Okay, so what's the question? Yeah, yes, sir. What about the advice, dollar cost averaging? It works in a bull market. You know what? Everything works in a bull market. And in fact, in a melt-up market, you don't even have a chance to dollar cost average unless you're averaging up and build an inverted pyramid. So I think that's it. Okay. So I actually, before I toss it over to Blake, to me, guys and ladies, TGIF has another meaning to me besides thank God it's Friday. And I don't know, maybe some of you guys agree with me. TGIF also means to me, thank God I found the partners at ForexAnalytix. Anyone agree with me?
That sounds like a different acronym.
Okay, it is, but anyone agree with me? Thank God I found ForexAnalytix. Okay, and not just because of this. Look at these closed trades. Blaker in silver and gold. Blaker in silver. Look at these. Grega. So some great trades. So the community did very well. Oh, thank God. Thank God it's face. Another one. Thank God it's face. All right, I like it. All right, so you know what? It's not just the pips. Okay, it's not just the pips. It's not just the performance. You know what you really could be grateful for and take to the bank? That the team is ethical. Right, wrong, good, bad, ugly in the market, they're ethical. And when people are ethical, you can trust them. And trust is not an easy thing to develop. It only happens with the passing of time, just like becoming experienced. So before I hand it off to Blake, I just want to thank Steve, Stelios, and Blake for putting together a great company where people could come here and know that we're going to be ethical and not revisionist and not talk about when things don't work out for us. We do every day. So we're not just here tooting our horn. Also, I know I make an effort every day to try and teach something to you guys. And the guys do too that come on here. So that way, you know, it's our mission. You could be a subscriber the rest of your life, but we want to give you tools that, say, for example, TD Ameritrade wants to buy the company from the partners, you know, and it's absorbed, whatever. You learn things that you're going to be able to use the rest of your trading career in here. Okay. You know, you'll say, oh, I remember Blake showing me that. I see that all the time. People saying, yeah, I learned that from Blake. Blake taught me how to trade. Okay, I see a lot of people using 3-drive techniques now and paying attention to divergences. So anyway, that's the new meaning. Thank God I found ForexAnalytix because I can trust them. Okay, so if you want to become part of a community that has values, so you're here. Give it a shot. Take the trial. sign up for a quarter. This is not, as you can tell already, this is not going to be a real quiet summer. So if everyone thinks, oh, I'm just going to go to the Hamptons and I'm not going to miss anything,
Coach, if you have
I
some
don't agree with
space,
them. Huh?
if you have some free room in the Hamptons, just let me know.
Oh,
I'll join you. Okay.
well, like I said, Stephen, I'll tell you for the 100th time, I'm driving to Greece
Yeah.
sometime this summer. Okay.
Uh,
All right. They're
you're
building
always
the highway.
welcome. Yeah, you're always
Okay.
welcome.
No, I really would love to go there. I think we should have a company get together in Greece. I know Blake wants to go back there and everything. I've never been.
Oh, Blake is coming next year, actually.
Oh, okay. Well, me too.
Okay, great.
All right. All right. So Blake, great work in the metals, bro.
Thank you very much. I appreciate it. It was a really good week. I'm very pleased with how I traded it this week and how the market reacted. It's interesting, Coach, when you see where let me pull over the screens really quick.
Okay.
When you see where the metals actually reverse, let's talk a little bit about that. First of all, if you want to know why they reversed last night, Vice Chair Williams was uh, uh, commented all of his
Dovish?
comments, huh?
Yeah. You mean his dovish comments yesterday?
Yeah. But he had to go back and backtrack them late in the day after the U.S. equity markets closed, after stocks got their nice little short covering boost. That his comments were more academic, not really related to the current monetary policy. So what happened is we saw a reversal in the precious metals. We saw a reversal in like you can see gold. It spiked up. The dollar actually reversed right at that moment. You can see the dollar it closed at its lows and it just reversed higher. So a lot, the thing is the FX market reversed. Precious metals pulled back. The S&P is still maintaining its gains. Now, that probably has more to do with like earnings that are generally speaking coming in a little better than expected. But I just really want to point out the precious metals here, and then I wanted to talk from Doji Hunter had asked a question about the S&P and Americans and how they're advised in their investments, and I'll go into that in just a second. But you can see gold actually reversed at the 127% extension of the 2016 highs to 2017 lows. We hit the 127% extension. Relative strength is that. I'm sorry?
I like that look. That's drive too.
Well, okay, so it was divergent and it stopped. So I actually sold gold right there, right, like the 1445 level or something like that, and silver, as you know, I closed that out at, well, the pattern in play was closed out at 1620 because we completed the flag pattern and we challenge this resistance. You'll notice that this is horizontal resistance. Now, I'm going to tell you something. As far as silver goes, I'm a buyer on dips. I want to see a dip down to 1600, and with gold, I'd like to see a dip down to 1400. I think we're still building. Let's put it this way: I'm not bearish precious metals. I'm actually bullish. I think maybe here in the next day or two they might pull back, but I don't. I'm not sitting here looking at it like, oh, this is it. I actually want to be just a buyer on dips now. So that's what I'm looking for in gold and silver. And that's why they peaked yesterday late in the session, is because of the walk back of some of the Fed commentary. Now, like I said, I still think that these precious metals are bullish. So any significant dip going into next week, I'm gonna look as an opportunity. Now, Doji had written in a question. I'm not going to pull up the question specifically to go word for word, but he said something about how Americans are advised to buy stocks, and let me explain to you guys how for those, especially those of you that are not in the United States, how a lot of this works. And there are no such things as stockbrokers. You know, when I started as a quote unquote stockbroker, and Dale, I'm sure you wore the hat of being a stockbroker at some point in your career. When I started in 1995 and I got my Series 7 license, I was a quote unquote stockbroker. Now, a stockbroker basically was just, you know, I was a sales guy. I'd just call up people and pitch them stocks. Fortunately, I was pitching good stocks. I wasn't in a boiler room type of situation. We even did the Pixar IPO. Our firm was part of that, so it was cool. You know, we followed some pretty good hedge fund managers at the time, and so we were always pitching good companies. But that was a stockbroker. You know, over time, because of the internet, and people were allowed to, you know, or can do their own research on a lot of stuff. Now you have what's called a wealth manager. So I know a lot of wealth managers. Wealth managers are very prevalent where I live, because I'm not in a financial center like New York. I live in Scottsdale, Arizona, which there's just a lot of wealthy people in my vicinity. So people I know are what you would call a wealth manager. A wealth manager is basically like what a stockbroker used to be, but a little different. They find, you know, these people that have money, and they'll divert them into, you know,
they're both salesmen.
Yeah, they're salesmen, but they're not really individually picking stocks like we used to. They basically will find people that have money and say, hey, you know, let's take this, you know, $500,000 that you have sitting over here, and let's put it in, you know, these index related funds, and they just follow a playbook by, you know, whether it's, you know.
Yeah, Nick G says even more skeptical.
Well, yeah, but it's just like you know, everybody's putting their money in the same pools with these wealth managers, and these wealth managers all follow a protocol. So when I talk to them, and these are people that I know too, if you talk to a wealth manager and you kind of talk about the inner workings of the market, they're like glossy eyed. They have no idea what you're saying. They're like, well, you know, based on what I see, the S&P, this fund should outperform the S&P by X, and you know, that's all they know. And so they're just.
Who's your wealth manager?
Me.
So I knew that.
Yeah, but I mean, I you know, obviously I talk to a lot of these guys, and they really don't know really a whole lot about anything, other than, you know, the numbers say that, you know, if I invest into this fund or that fund, that they're going to, you know, stay, you know, on par or outperform the S&P and blah, 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 blah. But the problem is everybody's putting their money into the same crap. And it's not like you're picking individual stocks. You're just, you know, I'm going to put it into this index and this index fund and that index fund. The problem is that if there's ever a shock, I'm sorry.
They're all index. They're all long.
They are. They're all long only index fund type of things. The problem is if we ever have a shock and you get these, you know, people trying to exit all at once, it could get ugly.
It's happened twice before. I guess so. There's one more time, right?
I mean, they happen from time to time. I think it's just you know, I think it is a train wreck waiting to happen. And you know, are we at the highs right now? Is this what's going to happen next? I mean, I don't know, and I don't know when. And I would assume yes. I just don't know. But anyway, I was just kind of following up on what Doji had asked. Now, real quick, I want to talk about the Canadian pairs, because I actually paired back my New Zealand Canadian. This is one of my largest positions of the year. Was taken in the New Zealand Canadian this week. I tried playing the Euro Canadian a couple of times, and you know, made money here, lost money there, and I'm just like, blah. The New Zealand Canadian, I took a very large position, and I've done very well. Now, I still think there's more to go. However, we have Canadian retail sales coming up. So let's take a look at the, and I basically have my position, halved my position today, and I'll look for reentry based on what the economic data is. But I'm specifically looking at the dollar Canadian. So here we are. we're in a descending wedge. And you know, the breakout points are here at you know, 131, or you know, actually it's like 130.75, I would say, roughly. You know, you could you know, do that if you want, and you know, be a little bit more granular with the analysis. But I think we really have to get 130, 130.80, 131 level to get a breakout in the dollar Canadian to the upside, and then obviously below 130 gets a little bearish. Just remember, we're paused at a. Let me pull up the daily chart here. We're at a 38% retracement from the 2017 lows here to the 2018 highs. We're at a 38% retracement. So if we're going to resume our uptrend, this is where we're going to do it from. But I don't want to get really bullish the dollar Canadian unless we get a move above 131. But I'm using the dollar Canadian to really cue my my New Zealand Canadian pair and how I want to trade it from here. But it really depends on this economic data. So if you look at, you know, if you look at the Canadian retail sales, we are forecast 0.3%. Previous was 0.1%, and you know, the Canadian retail sales, I mean, if they come in a little weaker than expected, that could be the catalyst that drives us up at least into resistance. Like I said, I just want to be really careful with the dollar Canadian because we are mid-range. A lot of times before data, you'll see currencies get mid-range, and this is mid-range. I mean, if you look at the range here, I mean, we're you know, 0.3% from the top end of the range, 0.4% from the bottom of the range. We are specifically or almost dead center mid-range right now in the dollar Canadian. So again, a breakout above 131 or 130.80 and a breakdown below 130. And so I'll wait to see what happens here with the dollar Canadian. One of the other things that I'm doing, for those of you that don't know, I am playing the dollar Mexican peso off of this really key weekly support. I believe that this is a big triangle, and the risk reward favors longs down here. One of the other reasons why I don't mind being long down at these levels, and it's frustrating because I own it right here. I mean, I own it at like 1901 or something. As I say, it was or something because my cost average is mark to market every day. It's not. I'm not your normal retail trader. I don't have a running, you know, cost average that just sticks. I trade for a fund and I use an institutional platform, which is JP Morgan. If you're not familiar, this is my platform. I have to input my data every day because my cost averages change every day. It's mark to market. So at 5 p.m. every day, I basically mark all my positions based on where the closing price was at 5 p.m. Eastern every day. So I don't have the luxury, like a lot of you guys, of saying, oh, you know, I bought the dollar Canadian at 130 and I'm just going to sit in it for like the next week or two. My cost average is constantly changing. So because my investors don't care if I bought a position a week ago and I'm in the money or out of the money. They want to know how much money they're making and losing on a daily basis. So that's why I have to mark to market every single day. But anyway, going back to what I'm saying here, I don't mind being long the dollar Mexican peso down here because if we do see a little risk aversion from current levels, which, as you guys know, at the S&P, we're up against this, you know, key resistance. If we do start to see this market roll over a little bit, then the dollar Mexican peso should firm up. We should get some emerging market currency weakness, which would mean Mexican peso weakness. So I am going to stay long while we're above this 1890 level. I've got my stops below, and I'm just kind of sitting in it right now. And again, I'm really focused on the Canadian pairs going into the Canadian retail sales today. As far as the euro or the cable, or you know, I'm not really too focused on it. I mean, they're just very choppy right now. Not a lot to do. You know, we are nearing support in the euro. I guess if I was if I wanted to play the euro, I'd just buy it down here below 112 if I could get it like at 111.90 and just put in a really tight stop. I think that's how I'd play it if I was gonna play it. I just don't know if I really want to do that. I don't know if I want to do that right now. But anyway, I'm gonna pass the baton over to my colleague Stephen Stelios, who have witnessed the worst earthquake in Athens history at 5.3. Is that what it is? Did you even feel it, Stelios?
Yeah, we felt it's not the worst one. We've had much worse.
I know. I was being a little sarcastic.
No, you could feel it rather strongly because it was at it was almost at surface level. So it's not only how big an earthquake is, but it's how deep it is.
Steve knows everything, doesn't he? I mean, come on.
He does. He's like a walking encyclopedia.
Yes. So
have you ever seen my Big Fat Greek Wedding, Steve?
Yeah. No, actually, I haven't. Believe it or not.
You haven't? Oh my God! You should see it. You're the dad. You're the dad. You're the dad. Did you know the word astrology is a Greek word, and it came from? You're that guy. Just actually, so you're that guy.
Actually, it's two Greek words.
Okay, see, this is the problem. Anyway, guys, I'm glad it wasn't too bad of an earthquake over there.
It is bad enough to receive phone calls from every relative, especially how it is, mothers, grandmothers, aunts. Like, is everybody okay? I was so afraid that something might have happened to you. Like, come on, seriously, do you believe there is any single building that fell? Like, I don't know, you might have been stuck in an elevator. Okay, how horrible is that? And you have to go through the same conversation again and again.
Steve, let me ask you this: have you ever been stuck in an elevator with yourself?
I have been.
I have
with yourself. Well, yes. with you, Steve.
Yes.
What, really?
Yes.
Okay, what kind of company were you?
a boring one.
All right, guys. Well, hey, the good news is you got people that care about you, and that we can never complain about. So, you guys have a great Friday. Have a great interview with Faith Might. Lydia a little bit later, and you guys stick around because Stelios and Steve will take you through the Canadian retail sales. I got to get to it right now. So
great weekend, Blake.
Thanks. You guys have a great weekend. All right.
Okay, bro. Bye, bro. Stay cool.
Okay, we have 2 minutes until the data, so we can mention a couple of things. We'll talk about the US after the numbers, but it's worth mentioning, if you see today the euro is underperforming. We were chatting about this on the chat room just a few minutes ago. There has been some, not developments yet, but there's talk of the relationship between Di Maio and Salvini, the two ruling parties in Italy, going a little bit sour, and there's talk about snap elections. Now, the official statement is that they have not gone to the president yet to talk about that, but this is something that's brewing, and we have to also note that contrary to the election results last time around, where the two parties got roughly similar percentages, this time around, the Lega Nord party, which is the nationalist party on the right side of the spectrum, is polling over 35%, which is a big leap. And the Five Star Movement is now third behind the Democratic Party, which is a social democratic party. So the bottom line of this is the euro doesn't like it because the Lega Nord party is or can be unpredictable. And the relationship with the European Union, they're far more aggressive, let's say. They haven't said, Di Maio has never said, oh, we want to leave the European Union, but he's much more, like I said, a bit more aggressive. So this is something to keep in mind. It is a situation that's brewing. The euro doesn't like it for sure. And we'll see how that goes on, because remember, Italy is not Greece. Its debt is, what is it, 1.5 trillion or something like that. It's a big deal.
It's comfortably, last time I checked, Stelio, its debt was 2.4 trillion.
Oh, was it over 2? Jesus, okay.
Oh, comfortably over 2.
There you go. Okay, so we have numbers in 2 seconds.
Yeah, that's why I pulled the USD card here. Oh, Bad data.
Is it minus 0.1?
Yeah. Minus 0.1 month on month versus 0.3 positive expected. And retail sales minus 0.3 versus positive 0.4 expected. So big
Yes.
misses. And revisions more or less flat. I mean, previous retail sales revised slightly higher, but previous core retail sales revised slightly lower. So revisions neutral more or less on average, but current data a lot worse than the market expected. Of course, it makes sense that we've seen this jump in the USD CAD higher, and I would advise that you be very, very careful here, because as you see, and I've been warning about this for several days now, as you see, the area that USD CAD was testing was clearly a confluence of supports, and add to that the fact that we seem to be breaking above, or anyhow, it's too early, we seem to be attempting to break above what looks like a descending wedge here. So I would be very, very cautious if I was short USD CAD. If you remember, I was warning that, you know, being short against this confluence is not a prudent idea. And in fact, if for some reason you like USD CAD to the upside, that was your opportunity to be on the long side, because at least you know that you were trading against major confluence of supports. This ascending channel dates back to summer 2017, so it's 2 years old. 130 was also a strong horizontal support resistance area. RSI on the daily was diverging since the end of June. So, you know, quite a lot of evidence here that there was a decent chance to see a rebound higher. Now, let's have a look at it on shorter time frame, like the 4-hour chart. Here it is. As you see, in essence, we were stubbornly holding this 130.20 area. You know, it depends on how you want to draw this. How I had it on the daily chart was like this. No, actually, I didn't. Come on, Maliki. Sorry, my cat is interfering. So something like this. Okay.
Is she playing with a mouse?
Thank God, no. She's trying to play with my shirt. Okay, there we go. So something like this. So let's see how this is going to work out. As you see, and if I go back to the daily chart, I think that this 130, 140 area is quite an important area. I think that the break above it is going to make the pair extend higher towards the confluence of resistances now at 133. So it looks to me like we can easily extend to 133. Okay. But, you know, one step at a time. First important step is to close above this descending wedge for the day and the week. Since it's a Friday, it's the same thing. And then we take it from there. Definitely, though, the fact that even when we were seeing, you know, strong US dollar weakness following Williams' comments yesterday, the USD CAD was not breaking lower, should have been a telltale. Stelio, by the way, do you want to make any mention having to do with what Williams specifically said, how he retracted?
Yeah. Basically, Williams, I mean, most people will have read it, but he expressed his preference to act quickly and more decisively than, say, you know, cut 25 now and then 25 a bit later. So he's in the camp of, you know, get it done quickly, and this way it works itself into the economy faster. But afterwards, you know, he had to retract the comments, and like Blake said, he said that it was theoretical. And I mean, I don't. It's frustrating to hear people like that in position of power, like he is, and say one thing and then literally hours later say the other.
I mean, come on, I really don't understand. Those people don't have any dignity.
I don't know, but bottom line is the Fed fund futures are pricing well over 25 base points for August, so that's a chance of a 50 now. And I remember, I think Bloomberg had it at 60%. My rough calculations have it actually just a little bit higher, but whatever, a 60% chance of a 50 cut. which personally, given the data,
I would trade against that, Stelio.
Yes, I was saying this morning in the chat room, yeah. I've taken quite a bit of profit on my single silver longs, but I still have some running, and I'm also short dollar Norway and euro Norway. So I have short dollar positions, and I
hope they go a half, Stel. You know
Sorry?
why?
Yeah.
I hope they go a half, because that will be a great bond short too. So I hope they go a half. Yeah. Let them use all their ammo. I wonder what they'll do at S&P 2100 later in the year.
Yeah, negative rates and QE, you know. But yeah, you're right. I find it hard to see how they're going to do 50. But I was thinking if markets are where they are right now on the day of the meeting or the day before, I think I'm going to buy some dollar yen or something just as a hedge, because I find it hard to see them do 50. Just for that, I still believe in silver longs and dollar Norway shorts. Don't get me wrong, but just to cover something ahead of the meeting if we keep pricing what we're pricing now. That's my plan. And
I'm totally with you, Stelio. Although you know my viewpoint that, and the fact that I'm long term, you know, bearish the U.S. economy. I mean, you know, in comparison to expectations, that's what I mean. I see absolutely no reason why they would be cutting, why the market would be pricing in anything more than 25 base points for August. Actually, with current data, I would even be skeptical about that. I mean, I would even consider fading the certainty of 25 base points in August.
Yeah, I mean, the thing is, the market is not stupid. You know, it's discounting. It's a discounting mechanism, and from the U-turn that the Fed did within 6 months, that tells us a lot. And I think that's what the market's trying to price: the fact that, okay, we're cutting, but it seems that, you know, Powell and the rest of the Fed, they are, how should I say it politely? They are, I think they're exaggerating in what we're seeing right now in terms of data, and their whole U-turn, the way it happened, the speed that it happened. So I think the market is probably thinking, look, these guys, you know, they are very capable of doing something that is not warranted. They're very capable.
With the speed of political pressure.
Yeah, well,
exactly. Yeah, I mean, one thing is for sure: if you're trying to fade the US economy in the short term, might be a bad bet, because we know that ahead of the US elections, and that is not, you know, I'm not implying something about Trump. Knowing politicians, I think every single one of them would do the same thing. They will do whatever is necessary, you know, ahead of an election date to window dress as much as possible things. So especially, you know, during this period, I would be, you know, quite careful, because, you know, they will try to add the economy to overperform, you know, in any visible and non-visible.
You know, Steve, we're still, what, 16 months away from that event?
Yeah, roughly that.
All right, so you know what kind of fits into that pattern? Why not get this correction, take out the December low by, you know, this fall, something like that, and then it gives you a whole year to rally the market to new highs. And that also fits with some Elliott counts that this pullback will be a 4 with a 5 to come.
What you are describing can happen, but if you're asking me if I believe that they would try to actually engineer something like what you're describing, I'm absolutely sure that not, and I will explain why.
Okay. I think I'm not saying they were going to engineer. I was just saying
I think that the economy is standing
in better position to bring the market back later instead of.
I think that the vast majority of the economies are standing on broken legs. The vast majority of the economies at the moment makes sense, even if this was a normal business cycle. The fact that it's the longest we ever had, the fact that you know, so it's overdue for, you know, a normal, a natural phase that usually lasts from 1 to 1.5 years of a recession, right? Which of course they want to avoid. I mean, they even admit openly that what they're targeting is extending the business cycle as long as possible. And there is not even a single reporter. That's why I really dislike how bad of a job reporters are doing, because I see so many statements that have very, very easy and key questions that any decent reporter would ask, and they don't ask about it. So, for example, you have a Fed official saying that, we'll do whatever we can to extend the business cycle, and there isn't even a single person asking, is that your mandate? Who gave you that mandate? Since when is the mandate of the Fed to extend the business cycle, to interfere in the business cycle? You have two mandates, and you've completely started ignoring one of them, which is price stability, because you're moving the goalposts further and further away from price stability, and having to do with the other employment. Theoretically speaking, you've already succeeded in that, theoretically speaking. So, who mandated you to try to interfere with the business cycle? But nobody's asking the question, and a lot more, valid questions that should be asked. Anyhow, to finish my point, Dale, the vast majority of the economies are standing on broken legs at the moment. So I think they would never take the risk of engineering a correction lower, because there would be a very decent chance that it would go out of hand, and it would end up being not a correction, but the beginning of an overdue bear market. So I think that they won't take that risk. They will try to keep the economy going with whatever news, tape bombs, whatever is required, so they can sustain it near the highs, or slowly pushing all-time highs for the next 15, 16 months. That's what they'll try to do. Will they succeed? I think they will also need quite a lot of luck to succeed. They will try, though. There is absolutely no chance that they won't try their best. They will try their best. In my opinion, it's at best a 50-50. If it wasn't for the elections, let's assume that we had like a new president coming up last year, and we had elections in 3 years from now, I would be very, very heavily invested that we would be in a recession within a few months.
Okay. I know what's going to happen.
Oh, it is going to happen, but it's a matter.
I know the roadmap.
Okay. Let's hope you're right. Let's hope you're right, because then you'll make.
I am twice a day like a broken clock.
No, you're more than twice a day.
Well, I mean, I just think that that would be perfect. Would set up his reelection. Cream the market, take out the D-slow, purge it, and then the Fed really gets aggressive. And
I don't know.
By the time we're there, the S&P's 4,000.
I don't know if it's going to guarantee his reelection, but let's take it oppositely. I think there is nobody that disagrees here that Trump has put a very, very high price of success, of his personal success, to what the markets, which he has connected to the economy, are doing. So I think there is no doubt that when the time of assessment comes in 16 months from now, he has failed in that, because let's say that we're in a strong bear market, he doesn't stand a chance to get reelected.
You know what? There's something that people aren't talking about when it comes to this reelection. It's more than him just retaining power and being the president. It's not just a job for him. If he loses, you've heard what Pelosi has said. And they couldn't go after him as a sitting president. This election means more to him than being president again. It means possibly legal problems, major financial problems, family exposure. This is life or death, and not just a reelection to President Trump, in my extremely accurate and humble opinion.
Might be the case. So although I put a lot less weight in what they say in advance. So, for example, how big of a chance do I give that even if Trump loses in the election, so he doesn't go for a second term, that they're going to legally go after him? Not
big
so
chance.
much. Not so. In my opinion, not so.
Big
not
chance.
so big.
Okay.
Not so. I mean,
you need to come spend some time here in America and see.
I know that the situation is quite polarized. There's no question about it.
Yeah.
But keep in mind that after being 4 years president, you know about a lot of dirty laundry for a lot of people. You understand what I mean? I mean, do you think that they only have some things on Trump? Don't you think that Trump has some things on some of them? So, you know, I wouldn't be that certain. We've
Well, I think he has more to risk, more than just losing an election.
yes, yeah, potentially yes. I would agree with that.
Okay.
Anyhow,
Let me correct.
He'll do anything, even call off an election.
that I doubt.
Okay. All right.
Steve, let me correct myself. I think somebody wrote here in the comments, I inadvertently said that Salvini is the head of Lega Nord. Obviously, sorry, that Di Maio is head of the Lega Nord. It's obviously Salvini. That was a slip of the tongue. Sorry about that.
Yeah, it's okay. It's okay. Everybody understood. Okay, Stelio, anything else before we go to the charts? Yesterday we had quite a nice roller coaster day. There's no question about it.
Yeah.
And what happened with the dollar? We finally saw some movement in FX, but the fact that, you know, we've seen that getting reversed in some pairs today is, you know, for example, look at the Euro USD. That's why I'm saying that I wouldn't be trading this thing, I mean, in any way until it proves that it's actually ready to move. Look at this. I mean,
He's tweeting about the Fed right now. Our members are telling us.
What a surprise. What is he saying?
Because of the faulty thought process we have going for us at the Federal Reserve, we pay much higher interest rates than countries that are no match for us.
Yeah, you know something? Your friend Kip Harriet or whatever that you had, he must be he must be a big fan, because I tweeted back at him. He tweeted like a few hours ago, answering to somebody wrong. The US economy is in great shape. It's booming. Rate cuts are required because it makes 0 sense for 53% of all European debt to have negative yields, while the US is forced to pay 2% on 10-year debt. Not complicated. So you see people that, theoretically speaking, they are mature enough, they are experienced enough in the markets, they're educated. I mean, and I just answered back to him, asking him, I would understand the statement that the US economy is overperforming other economies. But how can you say that an economy is in great shape and it's booming when it expanded its GDP by 1 trillion last year, and in order to do that, it needed 1.5 trillion of new debt? I mean, it's some things like, you know, make me so frustrated, because it's like simple maths. It's like somebody coming and telling you that, listen, 2 + 2 = 5. I'm 100% certain. I want no debate on that. If you can't see it, you're just a moron. And you're like, dude, come on. It's simple mathematics. If you need 1.5 times the debt for X amount of expansion, that is unsustainable. I mean, is there anybody that mathematically disagrees with that? Literally, a single person that really truly believes it? And if there is, please stay away from managing money. My personal point of view.
Well, tell us what you really think, Steve.
Hey, good one, son.
Anyhow, so Euro USD.
Let's talk about making money into next week. Let's get your look ahead of what you're maybe thinking about going into next week.
Yeah. So Euro USD roller coaster ride. Decent move high, decent for today's standards, right? Because we've completely forgot what real volatility in FX is. But anyhow, and you know, we've already retraced that part due to what Stelios said. Bottom line, is it bearish or bullish? Just from a technical perspective, you can make a case for both. If you want to be bullish, you can make the case, oh, look at this nice descending wedge. We have broken above, we're still holding above it. So it is bullish. Bearish case scenario. We had a clean ABC move higher. We've already broken below this channel. So why not continue lower? The general trend remains lower. There is also the third kind of a scenario. We are just now in a horizontal consolidation. Any way you slice it, you either don't have strong case to make bearish or bullish, or we are in a horizontal consolidation. Bottom line, stay away from it. Okay, judge what the dollar is doing by looking at other pairs. Cable, very, very nice rebound, But if you remember, I kept insisting, okay, nice rebound. With yesterday's candle, we actually got ourselves a very beautiful morning star formation on the daily chart. Quite a nice candlestick reversal pattern. But did we break above this descending wedge? No. Have we posted a higher high? No. What do we need to get to be convinced that, perhaps something greater is happening here? To see a daily close above 125.80. Until that happens, remain patient, look elsewhere, or whatever else. Do I think it can break higher? Yes, I do think it can break higher. But, you could also make the same case a few days ago when we were rebounding here. You could make the same case again when we were rebounding from there. Every single time we got rejected from the first area of resistance, though. And so far, with today's little pullback, I'm not saying that, today's little pullback is showing that we're continuing lower. So far, we're again rejecting the first area of resistance that we found. So nothing has changed that would make me push on the long side. Okay, now, a move above 125.80 is probably going to start triggering some short covering, and that on its own should be a decent enough force to propel the pair higher, with the next area of resistance being anywhere between 127.70 and 128. It doesn't look likely that we're going to close the week above it, at least with what we get so far, which means that there is a very high chance that we're going to start the next week being trapped within this wedge, which means, remain patient. Now, Aussie USD did make an important move yesterday by finally breaking above the confluence of multiple resistances, all residing between 70.30 and 70.50. And it's now retracing some of it, back testing this 70.45 area. Now, if we hold the retest, I think you have every reason to be bullish. We've triggered now this inverted head and shoulders formation, which targets 72.50. We're also trading above the 38.2. We've broken above this descending trend line resistance. We've broken above this horizontal support resistance area. The only thing that is still in the way is this 200 daily moving average that is a little bit higher at 70.90. But in any case, I think that if we do hold this previous area of resistance as support, there is a very, very good probability that the Aussie is going to continue higher. Same thing with the Kiwi. We had said multiple times in the past that 67.10 was a confluence of resistances that if we broke above it, we should see an extension higher. We've done that. We've been extending higher. We even closed above the 61.8 yesterday. And the next area of resistance is the 78.6 at 68.40. So as you see, by judging what the euro and what the pound is doing, and what the Aussie and what the Kiwi are doing, there is still no reason to believe that this period that the euro Aussie, you can see it here, the euro Kiwi, you can see it here, the pound Aussie, you can see it here, and the pound Kiwi, you can see it there, will stop being under pressure. I want to specifically mention again the pound Kiwi, and the reason I want to do that is because the pound Kiwi, from a technical perspective, looks to have broken below a channel that dates back to summer of 2016, to a 3-year-old channel. And that seems to be a very, very big bearish development. So I would be very, very careful trying to fade these ones. Because either you see the chart of the crosses, or you want to see separately what the euro, the pound, the Aussie, and the Kiwi are doing. In any case, it looks like there is more downside. Who's that? Stelio? Oh, Dale's unmuted. Okay, done.
That's not me. I'm not saying anything.
Yeah, it was Dale, Stelio. It's okay. I muted him. He had forgot his mic unmuted. Now, having to do with stocks, I will just focus once again on the benchmark, which is the S&P, okay, because the whole market focuses on that. It's considered the risk barometer for, the global risk environment. So if you remember, I said, nice, we broke below this ascending wedge, but what would make me more convinced that there is a deeper pullback? Only if we broke below this 29.58, 29.60 little horizontal support area. We didn't do so. When we had Williams' comments yesterday, at the same time that the dollar was dumping lower, the stock indices were finding a bid. So can we just retest this wedge and continue lower? Yeah, sure we can. But can I really make a bear case scenario as long as we haven't even managed to break a single horizontal support area? No, I can't. So I would be very, very careful trying to fade this strength. As you see, the Nasdaq even actually more or less held its ascending wedge. So the S&P did break below its ascending wedge. The Nasdaq, not really. I mean, it definitely didn't close below it on a daily closing basis. Okay, so we can see some type of a pullback, but I'm really not convinced yet. I need to see more, and most importantly, I want to see S&P closing below 29.58. Then and only then I will start actively looking for downside targets. Okay. Now, at the same time, European stock indices.
Steve, excuse me. Where did
Absolutely.
the upper wedge line on that S&P chart come in? Oh, okay.
There you go.
So if it retested it, it would the bottom line, it would be a new high, maybe up around 30, 40 or something.
Or a double top, for example. Depends
Yeah.
on how fast it does it. If it does it
I'm
today,
just right. I just would like to know kind of like a level. There you go. Where's that? 30, 40. That's a number that a lot of people had
depends on how
many
fast.
weeks ago.
Depends on how fast it happens. If it
Yeah.
happens today, it can just be retesting the previous highs, for example.
Right. Right. Okay.
So,
Thank you.
In wait and see mode, nothing really standing out as very bearish yet. Yeah, we do have RSI diverging on the daily. We do have this little violation of this ascending wedge. But as I said, I need to see at least one horizontal support area breaking to the downside for me to, to start looking for downside.
That's a great bull bear line. I agree.
Yeah.
That 2960 level.
Yeah, it is. It is an important level at the moment, and the market definitely needs to take that out for the bears to even start making a believable.
You have
case.
a leg to stand on.
Yeah, exactly. Otherwise, it's like
an opinion.
Yeah, it's just
a bias.
Like it's just flipping
a death wish.
Yeah, more of a death wish. Actually, if you look at the last 10 years,
I have.
Yeah, more of a death wish. Yes.
That's how I know it.
Yeah, a lot of people have been hurt by it. Trust me.
Yeah.
It's not an exception. I mean, I've been hurt.
Now I'm a perma bull, so I know we're close.
Ziggy says Dale just shows us that being old doesn't mean your memory is gone. Remember the number.
Now remember what you just said, Zig. I'm an elephant.
Yeah,
I know every trade Steve has made this year. I don't even need his P&L.
Yeah.
Isn't that amazing?
Actually, Dale, you have an amazing memory. I doubt it. I
got through school.
I doubt it that I can compete with you having to do with memory, and there is some age difference as well that works for me.
What? I don't. What did you say?
Yeah, just 5
I don't remember.
Just 5 years.
All right. So Lydia's not here.
She isn't?
No.
Really? That doesn't sound like her.
Yeah. Anyway, there's still a few minutes. Lydia, if you're here under a different name, send out something.
Yeah, just write it in the chat or in the question box, and we're going to immediately see it.
Yeah.
Thank you for your comment, David.
Did you see that joke someone gave you today?
Yeah, that was amazing, actually.
Okay.
I don't know if it's enough.
You can't repeat it. Yeah,
I know I can't repeat it. Yeah, but it's John. Thank you. I mean, that was a good joke.
Actually, I like your name change, your last name change. It was the best of the week as far as I'm
Yeah, from ForexGal, yeah.
yeah. You're at the courthouse changing your legal name.
Yeah, that
Right.
was
Well,
that was
you know, you could drive a Volvo to change your name to Volvo.
Oh, we have questions, by the way. Let me cover them
All
fast
right.
because Lydia might, show up at any given point.
Yeah, go ahead.
Comment, what is happening here with crude? I wish I knew. I mean, initially, I thought it's extremely likely that we're going to get rejected to 61.8. Then I got very skeptical that's going to be the case because the 61.8 stalled price, and created some distribution. But at the time, that looked like a consolidation bound to continue higher. I was mistaken, but I didn't have high conviction. So anyhow, it's not that I had a position on. Now we clearly got rejected, and we've had 4 down days that are quite strong. What yesterday proved is that at least the level I had given, this 54.75 area, is indeed an area worth watching as support. Listen, there is a very decent chance that we found a high and we're going to continue lower, because my thesis all along was that probably this rebound is corrective, and at some point, but I couldn't time that point correctly as I did previously on crude, we're going to see something like that, like a continuation lower. Could that have started already? Yeah, it is likely. What do I need to see to feel more, certain about such a possibility? This horizontal support area breaking to the downside. So if you, for some reason, you like crude to the upside, buying it against like 54.70 makes sense. But if we break below that, I would be very, very careful, because we can definitely see an acceleration lower, in my opinion.
Steve, before I interrupted you, you're covering European indices, and
a
couple of people want
you're absolutely
your
right.
views there.
So DAX continuing lower, but so far this move lower looks corrective in nature. So as long as we stay above like 12,060, I would be careful, because I think we can easily see a continuation higher from there. The same applies with FTSE. I mean, we've seen a pullback, but so far it's unfolding in a corrective manner. In this case, I would be watching like this 74.30 area as an area of support. So they are pulling back European indices, but so far I have no indication that this is anything else but a correction. So I'm not really bearish those as well. So it's not only like US stock indices that I'm not convinced that they're continuing lower yet, but it's also the European ones. Now, another couple of things I wanted us to see having
Lydia's here.
Okay, having to do with yen pairs. So then let me just talk about euro yen. Is I've been monitoring this triangle in euro yen for quite some time now, and euro yen seems to be breaking below it. So I would be very careful here, because it looks like to me that euro yen might want to produce another push lower, at the very least to retest this spike low that we had at 118.82. Okay. Okay, no need to eat time from your interview. Enjoy the interview, Coach. Have a wonderful weekend, everybody, and we'll be back on Monday.
Thank you, Steve. Okay, Lydia,
I'm
promoting
going
you
to stay
to
with you,
panelist.
Coach, until Lydia is settled.
Okay, let me unmute you. There you go.
Hey, Dale, can you hear me?
Yeah, you overslept today, didn't you? I know you. I hope you had a cup of coffee, because I'm going to grill you now.
Oh,
No,
God.
I'm
Yeah,
kidding.
I know.
Anyway, Lydia, thank you for being here. And I'd like to open it up with, everyone knows the reasons why to be bearish the pound, Brexit, done deal. Can you think of anything fundy wise, with everyone being so bearish, that could trip them up, that could be a positive? You have, I think, more cable bears than euro bears. And we had a nice little lift the day before. Oh, it was yesterday.
Yeah.
So anything you're seeing fundamentally that could shake the bears out of their short positions here?
Short pound.
Yeah, anything that could shake the bears out of their short positions in pound fundamentally that no one thinks is possible.
I think I don't think fundamentally anything has changed that would shake people out short bears. I think right now it's really technical. We hit
Okay, fair enough.
major support levels, really across the board, but in cable in particular.
Okay.
Yeah, I just think it's more of a technical move, profit taking after another long leg down.
Okay. I think we're closing higher on the week after making new lows. You make anything out of a weekly reversal to the upside? And it doesn't mean anything to you?
For me, no. For me, it just means that we're going to a much deeper correction. So I'd say that we've corrected all the way back up to $1.20 above $1.25.
We could go to 28 again, your dotted blue line.
Yeah, this is actually only 127.
See, that's a nice candlestick. It's not as strong as the one near the end of last year at these levels, but I don't know, maybe it's just a hope candle for people. But anyway, I was wondering if you think it's worth play for the long side, buy a break and look for this correction to extend higher.
You know what? I wanted to see that we close higher. I wanted us to see if we close at this support. This support level is 126.34.
Okay.
And we're already turning around at 125. At this 125.50 is probably 125.50 today. So I wouldn't get too encouraged about a reversal higher. I think we probably could go a little bit higher probably going into next week as people start to gear up for the Fed and start to anticipate the Fed. So yes, we can see a run up. I think we can move into this support. If we can go back to 127.75, that's a huge, that's the real line in the sand. 126.74 is more one of our support level, but this is the real big one at 127.75. It would be a reversal of this entire leg, and so we can see a lot of people start to get pound bullish. So I would just be careful of that. Getting too exuberant with bullishness in the pound. Kind of check to see what it's doing against the dollar. Because right now, I think folks are now getting closer to the Fed meeting on the 31st.
What are you looking for from the Fed? People are all over the map.
Yeah, people are all over the place. So I presume that we will get a rate cut. I think finally, they've been signaling it. Every Fed talk, every Fed speech we get has been mentioning it. So we'll finally get that. I think it's only going to be 25%. 25 basis points. If we get 50 basis points, I don't know that they would cut again in September. I expect to see back-to-back rate cuts as opposed to 50 basis points.
Okay.
Okay.
All right. And do you think that is going to be dollar negative just short term, or maybe dollar negative for just the day? Is it going to be a short-lived thing?
Yeah. I think it's a buying opportunity. That's what I think in the dollar.
Okay, so a shorting that'd be a nice shorting opportunity in cable.
Correct.
Okay.
Yeah.
Okay, very insightful. Why don't we shift to Euro Pound? We made new highs for the move and turned lower on the week aggressively. Interested in your support levels underneath the market because I still believe even though I'm trading a counter trend, that there's more left to the upside. I'm just wondering what you think we could pull back to support zones.
Yeah, so right, 89.50 has been that grind out area. So we're back down that way. If we could break below 89.50, these would be my levels that we would pull back into. Of course, 88.50 is the support, but then right under it, we have the Fibonacci numbers.
Okay.
Or Fibonacci levels. So 80, 88.37, 87, 70, 80. So 87 is the real, the real level here.
That was a huge pivot.
Yeah, I don't think anyone should get surprised about that either. A deep pullback like this. I mean, we've been grinding high for, I think this is 12, 13 weeks.
Yeah.
And the RSI has been tapering off as we've been grinding up higher.
Yeah.
So that's been telltale. And we've just been waiting for this reversal. I mean, not reversal. We've been waiting for a real correction. Everything's been so shallow. We've been waiting for a real correction in the euro pound. So I think we can get a deep correction if the pound really starts to see a lot of profit taking, particularly here in the euro pound. I mean, you know, we've gone back to that 90.50, which is kind of that blowout level.
Yeah, last time you were on, Lydia, you said the euro's the only thing that's stronger than cable. So so the winds have shifted for maybe a few weeks or so.
I hope so for this, in this particular pair. Like I said, I like corrections. So I like anything that can actually give us a healthy correction and make you feel good about the trend again, because I think I think the euro pound can move higher. But it needs to have this correction. So we need this break right now, just testing 89.50.
You know what? I needed it too. I've been short.
Oh, have you?
Not only the market needed it, but people, my account and people that work with me needed it. So thank you, Lord. All right. Anyway, you know, the yen had a negative week, but it's showing a little bit of a heartbeat. And, you know, I look at the yen and gold as a pretty good correlation. And I'm not sure this is the low in the yen, 78.6 back here, but it makes me think that there could be something happening on the guppy. So you're there. What are you seeing? Nothing yet, huh?
No, yeah, it's just a continuation lower.
Yeah.
Zoom in on this daily chart. Yeah, this is another one that hasn't really.
Look at that glaring divergence, Lydia. It looks like a 3 drive. Yeah, that's pretty glaring.
Oh yeah.
So it's we've had 2 lower lows and 2 higher lows in RSI here.
Yeah, that's a glaring divergence on the daily as well.
Okay.
Well, this is another one that's moved basically in a straight line.
Right.
A straight line down.
So maybe we could get a fib retrace here from some level.
Yeah.
Okay.
That's why it would be key for folks to look at the crosses to see if the pound is really is gaining strength, right? Because we'll see dollar weakness take the pound higher there, but then don't get too over exuberant with pound strength. You want to take a look at the crosses to see if the euro yen is dropping, if the pound yen is lifting, because the pound yen and the euro yen have been 2 of the currency pairs that have practically moved straight down. You'll see the other crosses as well. So pound strength has always been dubious. We've gotten really great corrections against the dollar, fib corrections against the dollar, but then everything else, all the crosses have been just moving basically straight down.
Especially against commodity currencies, right?
Yeah, you've seen that. We've seen that there too. The Canadian dollar, I think in particular,
run ball
has really just fallen off a cliff here. And so here's one that's oversold. We don't have divergence in the euro with the momentum. So that's why I don't think that this is pound strength. I think it's more profit taking from some of these straight moves. Like we've moved from support to support to support.
Yeah.
I think this is some profit taking. If next we could see follow through even higher, I think that would be great to kind of reset momentum and to get us into some really decent corrections. But everyone gets caught up in the pound dollar and think there's strength in the pound when we're really just seeing either dollar weakness, we're seeing positioning ahead of the Fed, but we're not seeing real strength. So I think this is the first time where we've seen a pop really in the pound, or I've seen a pop in the pound on all of the currency pairs, on all the pound pairs. So it's like, okay, this is really has to do with the pound, but I just think it's profit taking because we see everything really at these
Extremes.
Yeah, and these extreme.
I really like the way you're, you get a feel for the pound. You look beneath the surface. Is this pound weakness against a dollar? Is it pound weakness across other instruments to give you a bias for the pound itself?
Right. And then it helps to see where if there's any laggards. So instead of chasing one pair, like the euro pound in particular, instead of chasing that one, you can get a kind of go look and see, okay, maybe I can catch a move somewhere else. And catching moves for me has really been the dollar. That's the only thing that's really given us corrections, where you can get a nice setup if you're using the Fibonacci levels. Everything else has been really moving from support to support, which tends to work out only if we're in a strong trend like we have been in this case with the pound.
Okay. So if we've covered cable, I know you're an RIA. So RIAs are directing people's funds in the market. Maybe you have some views. You're reading my mind right now. And what are you pulling up here? The spiders, S&P.
Yeah.
Okay. So what are you thinking in here, Lydia? Maybe it's would it also be a great opportunity? I know as an RIA, I don't know, do you ever recommend negative or bearish positions through ETFs or funds if you see the potential for a pretty good drop?
So we'll express like a negative view in the market either with some profit-taking selling or with like just trying to enter new positions and properly enter new positions at corrective or at dips or at correction level.
Okay.
That's how we'll express negativity. And I haven't been negative since we've gotten above the support level. So back here, I haven't been negative since that.
Would 2960 being taken out change your mind?
No, it would have to be, we'd have to take out 2800.
Okay.
Yeah, we'd have to take out, we'd have to take out 2800. Anywhere in here, I might change my mind. Maybe if we got a new low back into 26. But I don't even know. 2800 would have me say, oh, okay, I'd have to watch this low. This low would have to hold if 2800 couldn't hold. But otherwise, there's little reason to be negative in stock markets. Very little reason. Last time we spoke, and a lot of that has to do with central banks, not only just being in the market, but just even the complete digitizing of our exchanges now, where you can put on this, they call them circuit breakers. They call pulling the plugs, whatever they can do. I doubt that we'll see central banks allow stock markets to be, to be healthy again.
Okay, well, the miners have been a meteorite, and the bonds have, pulled back a little bit. Any views on bond funds or miners or gold or energy? Do you diversify in sectors for your people, or is it just more of a general, what kind of funds do you go into?
Yeah, it's more of a general view, and then we do individual stocks. But for bonds, we definitely do bond funds. So I watch bonds through the TLT ETF.
Me too. So what are you seeing here?
I honestly, I see the TLT moving higher. I think we can still move higher from here. I think these corrections are just, fine. You can see this is just a nice leg down. We barely got to the 38.2, which is bullish in my view. If we, so just watching these highs, watching 130, really, like for price to be above 130, and then we can move higher. But I'm still bullish on bond prices. It's a cut, so we'll see what yields do. Will yields turn around and actually fall? I know yields haven't really been falling alongside rate cut expectations, and the Federal Reserve is effectively the hawkish central bank, because they've just been talking while everybody else, and the Bank of Canada probably more hawkish than them. So they've been talking while other banks are still having interest rates or cutting aggressively. We saw the RBA with their back-to-back cuts with the RBNZ, they're dovish. You know, they might cut. So yeah, well, it's central. I think the Federal Reserve, they're concerned. I don't think they're concerned about a strong dollar. And they're not concerned about inflation. They might be concerned about employment. They might be seeing some stuff that we're not seeing. So I do think we'll get a cut, and then we'll see how yields respond to that cut, and then we'll see what bonds keep doing. But I'm still bullish on bond prices.
I favor of you know, either way. I hope the Fed goes a half and TLT makes a marginal new high. I would short it. I also think that there's a potential that this is a failing rally here in TLT.
Yes.
And under 130, what would be your level?
Let's see, under 130.
I know that these are more macro positions for you.
Oh,
You're not trading them for your people.
Right.
But I like your technical eye. So I only bring you on selfishly so I could get all your get all your levels, Lydia. People think I do it for the community, but I'm really a self-centered son of a bitch.
That's all right.
All right. So anyway,
3850 would be that level. The former highs back in 2017 highs.
Yeah.
Oh well, that's not 2017 highs. They're actually the bounce here. But but that would be that, and that's also right around the 50% fib of this latest leg higher.
Yeah.
So
that would really be a mind blower that people wouldn't understand, that the Fed is easing, they control the short end of the market, and longer term yields rise while the Fed is easing. I think that would really, that'd be one of the biggest surprises this summer.
I agree with that.
Yeah. So why don't you show people how they could follow you and take advantage of your, you know, great eye, my trading warrior sister, and your views and your demeanor. You have a great demeanor for teaching. And so, you know, I could tell you're more patient than me. Most people are.
You get high praises too with your teaching now.
You know, but most people are, Lydia. So it's no real high bar for you to have achieved that. But yes, why don't you tell people about, you know, what you do and how they could hook up with you?
Sure, thank you. So yes, I'm a trader, but I'm also an investment advisor, and I work with many different kinds of investors. And I also coach and teach for any newbies that are out there and wanting to get more of a, I'm going to say a classroom setting, but it's more one-on-one with somebody with me. I teach varying levels. So newbies, I have a course right now that is a 6-week course, meeting twice a week. We do one-on-one, we do hangouts, and we go through the charts, and I really give you the foundational tools and foundational skills. For my hope is that you'll build on that, and we focus really on the charts. We focus on charts and price action and momentum. We don't do any kind of trading at all. That's kind of the next course. So you can learn with Lydia is the class that I'm doing right now with theprofitroom.com. But stay tuned. At the end of the summer, I will be releasing a packaged digital course so that people can have recordings. I don't record my any of my sessions. So if you wanted recordings and you wanted videos, and so you can go back and learn, go back, rewind, and things like that, follow along.
Great idea, Lydia.
The summer. And so then with that, I'm also packaging that with a mentorship too. So be on the lookout for that. That's coming at the end of the summer, just for those of you who want to have something, particularly it's geared for newbies, but if you just want to have something that you can refer to and go back to over time and or do it on your own time, this is, I'm hoping this will be a helpful alternative for folks. I know folks in other time zones. I'm on the Pacific. I'm on a Pacific time zone. So I think folks in other time zones, it's been a challenge to meet with me. So I'm hoping that this will be another alternative. And then I'm relaunching the coaching and the mentoring. So that's all coming at the end of the summer. And then if you'd like to invest with me, you could click on Invest with Us and learn a bit more about the RIA, the advisory firm that I do, and get in touch with me about how to how we actually do our services there. We do more of a custom approach, so it's not really hedge fund style at all, where everyone's in the same trades, but we really do customize portfolios according to your goals and pick investments that will work, that will get you to your financial objectives. So that is the RA. So I like to say that everything begins and ends on the blog. It's faithmightfx.com. You can follow me on Twitter and Instagram at faithmight, and catch me in social media that way.
May you have the summer of pips,
you
Lydia.
Too,
okay, and and the summer of love.
Okay.
I think that was 1969. The summer of love. Anyway, Lydia, thank you so much for showing up, and
thank you
for me now to know where to cover a lot of my positions. I wrote all your numbers down, and
cool.
Well,
it's available pretty soon, so everybody you can come back and watch and take all my levels.
Okay. All right. Well, thanks, Lydia. Have a great weekend, and thank you so much for stepping up and being one of our favorite guests on Face.
Thank you for having me so much.
All right, Lydia. Okay, everyone. Hope everyone had a great week between Blake's metal calls, Euro Pound, everything else. Do your homework over the weekend. Remember, most of all, don't just count your pips, count your blessings. Tell the people in your life you love them. Speak it out. They're not mind readers. And have a great weekend, everyone. And we look forward to helping traders again next week. So adios and enjoy your weekend. Thanks again, Lydia.